For introduction, the development of a vibrant bond market in Malaysia was supported by a facilitative regulatory framework and also with the introduction of disclosure-based guidelines. Malaysia's capital market is governed by the rules and regulations issued and enforced by the Security Commissions, as well as by Bursa Malaysia and its subsidiaries. The Malaysia Debt, Securities and Sukuk Market is supervised by the SC and Bank Negara Malaysia.
Since we look into its regulatory structure, we can see that they have 5 structure that involve with the regulation in this market. So the first one is BNM, Bank Negara Malaysia, SC, Security Commission, Bursa Malaysia and its subsidiaries, FMA, that is their Market Association, and the Sharia Advisor Council, SFC. Okay, first we look into Bank Negara Malaysia. So the principal objective of Bank Negara Malaysia is to promote monetary stability and financial stability conducive to sustain the growth of the Malaysian economy. They will focus onto 3 pillars of central banking. The first one is monetary stability. The second one is financial stability, and the payment system is the last one. So they will follow a few of acts as I shown on my, I don't know, left or right. Okay. So they also will oversee the fully automated system that is fast and also rentas, real-time electronic transfer of funds. The next one we look into SC, Security Commission. So actually it is the primary authority to regulate the market. It also aims to promote and maintain fair, efficient, secure and transparent securities and derivative market, and to facilitate the orderly development of innovative and competitive capital market. So they follow a few of act given, and the last purpose of it is to promote the development of the securities and also derivative market in Malaysia. Okay, the next one is FMA. It stands for Financial Market Association of Malaysia. So actually, it's not a officially a self-regulatory organization, but their function is to organize and certifying participants in the capital market in Malaysia, including the bond market. ST actually recognize the certification by FMA. That's why it's actually collaborate FMA and SC. And their main purpose is to develop and maintain a code of conduct for the industry, redefine quoting and trading convention for debt security and sukuk and other rules affecting the financial market. The next one is BM and its subsidiaries, Bursa Malaysia and its subsidiaries. So it actually act as a frontline regulator of Malaysian capital market. Okay, the purpose of it is to ensure orderly dealing in the security deposited with Bursa Malaysia Depository, clear and efficient clearing, and also the settlement arrangement for transaction and settle through its facilities. So anything that happen will through Bursa Malaysia. Okay. It's also serve as to regulate and supervise the ETP, and BMS govern the exam regime for profile listing and also trading of exchange trade bond of sukuk, ETBS. Okay, so the last one is the number 5. The 5th one is SSC, Sharia Advisor Council. So basically it's about how to maintain it as Sharia compliant. Okay, the main purpose, if we can say it, is to ensure that all Islamic capital market products are compliant with Sharia principle. Actually, there are 2 type of SSC. There is SSC in SC, Sharia Advisor Council in Security Commission, and also SSC in BNM, in Bank Negara Malaysia. SSC in SC has the mandate to make final decision on Sharia matter concerning Islamic capital market product. while in BNM is the sole authoritative body on Sharia matters pertaining to Islamic banking, takaful, and under purview of BNM itself.
Hi, my name is AZRI bin Muhammad SUDIN, and I'm going to continue this presentation with regulatory framework for debt securities and sukuk. During the early years, BNM took several initiatives to strengthen the legal and regulatory framework and market infrastructure of the underdeveloped primary and secondary markets. In March 1993, the SC Security Commission Malaysia was established to act as the single regulatory body to promote the development of the capital market, particularly to rationalize securities market regulation. A set of guidelines for private debt security (PDS) issuance was introduced in 1988 before the establishment of the SC. In 1990 and 1995 respectively, the Rating Agency Malaysia, that is RAM, and also Malaysian Rating Corporation (MARC) were established to provide independent opinions on the potential default risk of debt issuers and spread all appropriate information to existing and potential investors in a timely fashion. Furthermore, to represent the industry's views and work with regulatory authorities to promote the bond market, the Bond Dealers Association was established in June 1996. The Bond Information and Dissemination System was introduced in October 1997 to facilitate efficient trading and promote transparency of information related to domestic debt securities. Besides that, to enhance cost effectiveness and efficiency, BNM introduced FAST in September 1996 to speed up securities tendering, and also rentas in July 1999 to reduce settlement risk. A Capital Market Strategic Committee consisting of high-level representatives from the SC and the private sector was established in September 1999 to facilitate the development of the Capital Market Master Plan, that is CMP. This includes CMP1 and also CMP2. The Securities Borrowing and Lending Program was introduced in December 2001 via the rentas system to further improve liquidity in the market. Meanwhile, the Institutional Securities Custodian Program was implemented in October 2004 to promote lending of securities to the central bank. In addition, for Islamic finance, the SC supervises the Islamic Capital Market (ICM), which operates parallel to conventional capital markets. The ICM plays a complementary role to the Islamic banking system by broadening and deepening instruments and access to Islamic financial markets. To advise the SC on Sharia-related matters and also to provide Sharia guidance on ICM transactions and also activities, the Sharia Advisory Council (SAC) was established in 1996 by the SCM to standardize and harmonizing applications. Moreover, in March 2015, the SC introduced the Launch and Launch framework to shorten time to market by enabling wholesale products to be launched once the required information is lodged with the SC via its online submission system as compared to the current 14 to 21 days approval time frame. The SC also streamlined the relevant regulations on retail bond and sukuk issuance in the guidelines on issuance PDS and sukuk to retail investors effectively on June 2015. To conclude, the SC and BNM play a dual role of supervising market intermediaries and the activities in the market, as well as actively supporting and developing the market infrastructure and fostering a conducive and facilitative environment for debt securities and sukuk.
Hi, Dr. AZNAR here. Assalamualaikum. To continue with the regulatory process, to streamline the issuance process, the merit-based regulation (MBR) was replaced by the disclosure-based regulatory (DBR) framework. The SC's guidelines on the offerings of private debt securities, which came into effect in July 2000, have played an important role in promoting an efficient issuance process. In the mid-90s, the approval process for bond issuance could take from 9 up to 12 months. The long waiting period created uncertainty and therefore the disincentive for companies to seek funding through the bond market, where timing is a crucial element in determining the success of an issue. Thanks to the introduction of the PDS guidelines, an issuer can now secure an approval within 14 days after submission of complete documentation. The introduction of a shelf registration scheme has also provided issuers additional flexibility in timing of issuance. The scheme allows eligible corporations to make multiple issues of debt securities within a 2-year period with one-time approval subject to a certain criteria. The efficiency of the issue process, in particular the large financing potential of the shelf registration scheme, has started to convince the private sector that financing through the bond market may offer a viable alternative to bank loans and the equity market as a whole. The liberalization of issuance procedures has made it more attractive for issuers to tap funds in the corporate bond market than in the equity market. In 1997, PDS issues accounted for 44% of the total gross domestic funds raised via the capital market, in example bond and equity, by the private sector, and by 2004 this figure had reached 81%. Currently, the corporate bond market accounts for approximately a quarter of the total debt financing, including bank loans, in the economy compared to approximately 10% in 1997. Thanks.
Assalamualaikum, my name is Fatin. I will discuss on how the non-resident or foreigners want to issue bond in Malaysia. First of all, they need to get approval from the relevant authorities, and for the settlement, they can use both the local currency of Ringgit Malaysia or the foreign currency except for the Israel currency. And for the relevant regulations for the non-resident, they can get more information in the quick reference for information cross-border bond issuance and investment. As a conclusion here, on the analysis of the regulation bond market in Malaysia, we can see Malaysia's security market has an outstanding and dynamic bond in the market of region, especially in ASEAN. An amazing improvement of the Malaysian bond market has a great extent been accomplished to the uncommon development to the corporate securities and sukuk markets, which achieved the size of 848 billion ringgit.